Hello everyone and welcome to the channel. My name is Brent, and in this video we're going to go ahead and do some options over on the Merrill Edge platform with Bank of America. I did have some covered call options that recently expired on Friday. One sold in the money, one did not make it to the strike price, so I was able to keep my premium, I was able to keep my shares, and I do have one other option that is currently open on VTI, so we'll go ahead and cover that. And that's basically what we're going to go ahead and cover here in this video. It's going to be fairly short, so hopefully it is enjoyable and you guys get some value out of it, especially if you're using the Merrill Edge platform. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. It really helps out this video, gets seen by others, helps out the channel, and I really appreciate it as well. So let's go ahead and get started. And really quickly here, the markets are currently open. So here we had a massive recovery since Friday. Friday, the market was down 1.31 with the S&P. Monday here, it has completely recovered everything. This is showing signs of strength here. The Dow Jones recovered plus some here after Friday's loss. The NASDAQ only lost about 0.45% last week on the week. On Monday alone, it's up 0.75. So big recovery across the three main indexes. I've been kind of watching that throughout the day. I did record another video, which I'll probably release a little bit later on my Monday's buys, but stay tuned for that. So let's go ahead and dive into the Merrill Edge platform. Let's go ahead and cover some of the options that I did have that expired here on Friday. So number one, I had Amcor that had expired with a strike price of $21. I aimed just a bit too low on this one. I had sold it and had collected $60.34 in a premium, and that had expired. It actually expired. It didn't expire, but it actually had closed. The current stock price is at $22.90. My strike price was at $21. I purchased this holding at, I believe, around $19. So it climbed up to $21, which is a $2 difference there. So I made $200, and then my premium $60. So I made about $260 on that trade. And this is all within an IRA retirement account or a Roth IRA. I know it's in one of my retirement accounts, so I didn't have to worry about taxes. But it did climb up to $23. So that's $2 over my strike price. So I missed out on that 2 by 100 shares. So I missed out on about $200 of profit. If I had just aimed for a higher strike price, I would have been able to keep my shares. And you don't want to usually aim too low on those strike prices, which I'm not going to go ahead and do that with Tattooed Chef anymore, because during the very end of May and early June, Tattooed Chef had actually hit a recent high of around $23. So I know my strike price on Tattooed Chef was $22.50. It expired on Friday, but it pulled back pretty hard. It had climbed up to $23. It is now down at $20.09. So it's gone down off those highs recently, and I'm really happy for that, just because I'm not in a position right now where I want to sell out of Tattooed Chef. I bought Tattooed Chef with a cost basis or a unit price of $16.50. So right now I'm up 20-some%. If it climbs to 23, 20, higher than that, it'll just continue growing. So I don't want to aim my strike price low in that 22.50 range, because I do believe if the market is showing signs of strength right now, where across the board we had a pretty hard hit last week, but instead of showing weakness, we're actually showing some strength and recovering. We could hit that 22.50 once again, and then I would be forced to sell out of those positions. And then I do hold VTI inside of my taxable account. I only purchased 100 shares. And I was hoping that the market would kind of tumble further. You can see that I only made, $5 or $6 on that covered call. So I really shot them up in the dark. Right now, VTI is at $219.52. So there's a big difference there between $225 and $219. So I kind of just shot it way up in the sky. That way I still get some sort of a premium, but it's out of the money by quite a bit, that I don't believe that they would be. I don't think that price target will hit within the expiration there. Oh, it actually expired. So these actually expired. I got to keep my premium, got to keep my shares. So I'll go ahead and probably write up another covered call on my VTI position here after this video. Right now, we're going to be focusing on Tattooed Chef. So those are the three positions there. I'm going to go ahead and pull up the options for Ttcf, just kind of punching it up at the top. And we're going to go into the research tab now. So let's go ahead and open up their option chain right here, clicking on the option chain tab. Now, again, Ttcf is currently at $20.13. We have strike prices that are in the money, which are below. I would never recommend anybody do any sort of covered call options where you're actually aiming low, because you'll be already in the money. So usually you do get a higher premium when you're selling your positions into the money. You can see here that these bids is $1.20, $2.80, and these are per share, or per share. So 100 times that $1.20, that'd be $120, $280, $500, $740. So you're basically kind of just guaranteeing people will take the shares from you. What I'm going to do is do a covered call and ride it up out of the money with a strike price higher than where it's at. That way I can kind of collect the premium when I sell. So here, this is a bid of 55 times that 100. That'll be $55 right there, $30. So $22.50. I know that's pretty close to being in the money. That's about 12% difference from where the price is at now. This is about a 25% difference. And I think that this is a safer bet in the month. You know, what could happen here? Volatility, where we could climb up to 25, we could not. I will make $30 off this one, and I have two options I can sell. So I'll make $60 on this one versus I'll make $110 doing this one. So I'll make like a $40, $50 difference there. But this one's much more riskier for having your shares, you know, sold off versus this one. So I'll go ahead and aim for the $30 bid at a strike price of $25. So all I got to do is click on the $25 strike price. We're going to go ahead and trade this one. So I'll be able to collect all the capital gains up until $25. And then if it does break $25, then it'll be in the money and I will have to sell those positions. So here we're going to go ahead and go sell to open. I'm going to have 200 shares of Ttcf. We're going to go ahead and select that. And it's however many bundles of 100 shares. So in this case, I have 200 shares of Ttcf. So I put in my quality there of 2. I'm looking for the expiration of 16 July. I'm not going for the $22.50. I'm going to the $25. And this is going to be a call option. And we're going to go ahead and set this to a limit. And we're going to go ahead and just make it a bid price right now. People are asking for 35 cents. But I just want it kind of filled. It's already out of the money, so I just want 60. You know, I could go for $60 or I can go for $70, but I may have to wait more on this one. You can see that there's bids. There's 73 bids at this one versus asking with 58. So I'm going to go ahead and go with the 30 cents there for the bid. Go ahead and set it to day, and go ahead and select preview. So here we can see that my total order would be $60 based on the bid and the number of shares. There's an SEC fee of 1 cent, my commission of $1.30. So I will receive $58.69 paid out to me. We go ahead and submit that order. And thank you, your order has been successful. We can see that it has been executed already, and it executed there. So I collected $58.69, and I can go back to my holdings, and we'll see that that option has been open. So Ttcf right there opened up. It has a new option of $25. At the expiration there is 16 July. And that is basically it. So if we do hold our position, so Ttcf is at $20.14, and our strike price was 25. So that would be a 24.13% difference there. And we can actually see, let's go ahead and look at our covered call option calculator here. So Ttcf, let's go ahead and get that price. I guess we could actually manually enter it in. So manual is 22.14. Yeah, it's fine. We'll just go ahead and leave it. Purchase price, my purchase price was $16.50. I have 200 shares. I'm going to write, and our strike price was $25. I actually did 30 cents instead of 35. And we have 2 contracts. So let's go ahead and calculate that out. And we can see here our entry. So we got $60 paid to us. Our maximum risk, like if we were to lose, if the stock price went down to 0, our maximum risk would be that $3,240 because that's our base investment. Our maximum return, if it does expire at that $25 price, would be $1,760. That would be our gains total if we were forced to sell at that $25 strike price. So we bought it for $32.40. If it does reach $25, we'll make $1,760 of profit, capital gains all the way there. We just sold 2 of those covered calls, so we made about $60. We collected $60 as a premium, so we can kind of adjust our cost basis with that. I've already sold $120 prior going into my June. So I've made $180. Let's see, 120 and 60. Yeah, about $180 total, kind of selling covered calls on Tattooed Chef so far. So that is basically it for this video. I really haven't done a whole lot. I would like to buy more VTI within these portfolios. But this is just my IRA right here. So yeah, you can see the positions in my IRA are actually just Apple, Abbott Laboratories. Amcor wasn't here, but no longer there. And I do have some cash pending, so I'm going to go ahead and get this reinvested as well into some shares of something. That way I can kind of write some more covered calls. So that is it for this video. Let me know down in the comment section below. Are you, what are your favorite kind of options? Do you do puts? Do you do covered calls? And, what's your favorite broker that you guys are using for writing your covered calls? I think a lot of people are using Robinhood or Webull right now, but for writing my options, I've been primarily using Merrill for the last few months. So that is it for this video. Let me know down in the comment section below if you guys have any questions. Otherwise, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and stay tuned for the next video. Bye-bye.